You want to get into private markets, like they're private. That is literally the most important thing you have to keep in mind. If you want to get into private markets, you have to realize that they are private and they're private for a reason.
All right, welcome back to the Ownermo Summit. Very happy to welcome my brother Chris Lyons. Obviously, he's someone that people have probably recognized. He's been in all the rooms, right? And I remember meeting Chris over a decade ago back in Silicon Valley, and he was at that point in the rooms, right? But he's only really elevated his game, and in many ways, he epitomizes the conversation or the theme for this Ownermo Summit, which is the private investing. And so this talk is all about the evolution of the private markets. But before we get into it at all, I think a lot of people probably have seen or heard about Chris's journey, but we got to start there, Chris.
Good to see you, man. And shout out to everybody here today.
Course. You know,
I appreciate the time.
I appreciate you taking the time, man, because it's a lot going on. I feel like, myself spending almost a decade in Silicon Valley, it was always a fast-paced culture, but we're like in warp drive, hyperspeed at this point. And so just digesting everything that's happening all at once is a daunting task. So I appreciate you stepping away and sharing what you're learning with other folks. So let's rewind back, man. Let's call it 15 years, right? And we talked about it. You're not even 40 yet, man, which is unbelievable because you live probably
coming around,
but you got a lot to show for it. But there was a world where, you were living completely differently, right? You were pursuing your passion, you were pursuing your dream, but to have achieved, kind of what you achieved in a completely different space, you have to look at the younger version of yourself and look at yourself now and be kind of impressed. Let's just start with, where did you kind of begin your career? How did you make that transition into tech? And then obviously you've kind of ushered in what I would consider to be a new level cultural intersection with tech that we can get into in a second. But let's just start off with the beginning.
Well, let's see. I mean, it really started. Well, first and foremost, I still have your book, by the way.
Never gave it back. Which book is that, for the record? Because
I think it was probably over. I mean, not only did I read it, but I was like, okay, I'm going to take good care of this. And so, and actually, it's such a small world because fast forward, we're now going to be working, and I've been working with Christina Lewis and Charles King and the team, and we're working on actually putting that into an actual full circle film. So, I wanted just to give you the props on that because it's still one of the best books today. And Reginald Lewis was one of the first and best people to kind of intersect all these worlds. And it's actually kind of a blueprint because, I think that you have to kind of have this everlasting idea of what I would say, what the possibilities are, and not going after big, audacious goals as a challenge, but more so that there's fun on the other side. And so that's kind of how I've always seen things. I've been always had this mentality around kind of going where the 1% are. And it's a lot of it because of mentality. So like if, when I was in the music industry, I was in Atlanta, everybody wanted to be a music producer, but nobody really knew how to be an engineer. But the engineers were the ones that were needed the most in the room. And so rather than being and going with the crowd, going against the grain and going after an industry or putting yourself into an environment where you can then actually have a competitive advantage because of how you see the world or how you do things. To me, that's always kind of been my North Star in terms of how I see the world. And, I think that if you apply all of the things, at least to date in my career, how I've seen the space, I would say it really does boil into, having this mentality around kind of going where other people aren't going, but then taking your genius and then applying it into the world and, and then holding on to those beliefs that something that nobody else does, because whether that's entrepreneurship, whether that's going into different industries, whether that is starting a business, whether that is, proposing a new idea internally in your corporate job or whatever, I think that is the only, not the only, but I think it's the best approach to have radical change in the positive direction, and also gives you the opportunity to kind of capture your insights in a way that nobody else has.
I love that, man. We joked before we started recording. I was saying, not even 40 yet, but you've lived a lot of lives, and the rap, the jersey's almost, I think, raptor level, man, to be honest. But it's funny you say that because, I think if you were to write at this point a bio, right, ahead of your time or ahead of my time would be like a good title for that. Because I would even argue
Like that.
when
Okay.
you were on the music scene in Atlanta, like Atlanta was Atlanta. You had Outkast, you had players there, but I would argue you were even early in some ways to kind of what became obviously what everybody noticed. Similar to how in Silicon Valley everything kind of really, kind of converged as the place to be.
For
That was
sure.
that was a little bit ahead of your time as far as a place to be in music.
For
And
sure.
I remember, you brought up like Christina Lewis, you brought up Charles King and the full circle nature of like, telling this story that needs to be told. But I think when I think about you, I think a lot of what you mentioned, which is a differentiated perspective, is a big part of it. But also, I think a humility. I mean, even when we were connecting and you said, hey, we talked about the books, a voracious learner, kind of understanding different dynamics
Yeah.
is a big part of what I think you get access to a room, but keeps you in the room. Can you tell us a little bit more around like how you've operated? What's your philosophy in terms of building relationships such that your perspective that you think is valuable? Oftentimes, a lot of people have different perspectives, but they don't necessarily make it into the rooms or stay in certain rooms. How have you
Yeah.
approached that?
Well, I think like relationships are literally what make the world go round. And, I think, and I learned this actually from Ken Coleman, where, it's like your network is your net worth. And it's not who you know, but who knows you. And because especially when you're thinking about specific times when you want people to always keep you top of mind on, whether it's an activation, an opportunity, a job, a business collaboration, you name it. So, what's the best way in order to do that? In my opinion, I feel like you have to always, my mind kind of moves around in a series of different nodes. So, like, if someone's talking to me about something, I have to, in my mind, I always have a running network of who we can kind of either one bring into the space, whether it's a co-investment opportunity, whether it's a partnership, whether it's just an introduction that's going to be super valuable and not waste anybody's time. And I think that over time you want you have there's two different things. There's pick up the phone relationships, and so that's like when you're actually doing deals and we need to make things happen, you need to make sure that you're building a relationship with somebody to such a degree that if you need something, all you need to do is pick up the phone and call them, not shoot an email, not, get an introduction. Like, and the more of those you have in your tool chest and actually leverage them, I feel like it gives you a competitive advantage in terms of really believing that anything is possible when you're actually, in the field trying to make things happen. Because through that, through actually thinking through how you can help other people in terms of connecting the dots and creating valuable opportunities, one, it gives you a much wider range of what's possible. So if somebody's talking about doing something and wanting to and do something, and you're like, oh, well, I know this person that can bring that to the table, or as opposed to just having a very small ecosystem. And so, on top of just networking within your circle, I think networking amongst different verticals as well too. So if you're in finance, try and meet somebody, go to the founder events or go people that are in sports, because there's always overlap and there's connection points, but you have to figure out kind of how to map those worlds together. And so, but I think it all really boils down into value, and especially in today's world. I mean, time is finite and it's the most valuable resource we have. And I think as, we develop in our careers, we realize that more and more that we need to really be extremely intentional. If somebody's sending me some random emails or, asking me for favors that and asking me to do something, and I don't even know who you are. I don't know why I need to go give out my social equity. Like that email is going to get archived now. 10 years ago, maybe I would have taking a look at it. But in a world where we need to focus on our priorities and we need to level up and we need to make sure that we're working with people that are adding into your life personally and professionally, you have to curate a very strategic network around that. And I think that being intentional in the requests that you have, but rather than asking for things, I think the best way in order to actually start moving ahead is actually to figure out ways in how you can be, the point guard of the game. And so being able to always, like talk with Magic all the time, and everyone, the team loved him because he was always going to give the rock up to somebody, always going to be able to pass the ball. He always knew how to find the right person, and then right when the time was right, when Pat Riley was like, "Look, I need you to score." And then you're like, okay, great. Now, I've already established this part of the game and I can already put these buckets up. But if you need me to go take it to the next level, that's no problem. And I think that that's kind of how the world really works in business and entrepreneurship and networking, where if you're not putting people in the game, then one, you're always going to be looked at as someone that's trying to receive stuff, and two, like, how are you going to be in the mind of somebody else because of all the good karma that you've been able to deliver through the ecosystem? So
I
that's
love
kind
that
of how I see
because at the end of the day, this conversation is about private markets and the evolution of private markets and access, right? Obviously is one of the biggest levers of it. And what you just gave is kind of like a masterclass of your perspective built over decades at this point and building real relationships and leveling up as well, right? Where you have to then kind of focus in on where you think a transaction makes sense
Heck
for
yeah.
you.
I
So
mean, you want to get into private markets, like they're private, I mean, that is literally the most important thing you have to keep in mind. If you want to get into private markets, you have to realize that they are private and they're private for a reason. And if you want to get into the circles, if you want to get into the ecosystems, if you want to get into that seed deal, that early stage investment, you know, it's going to be for a very finite amount of people that are going to get that exposure, and you need to make sure that you're putting yourself in the best position to get that call. And how do you do that is you have to be proactive along the way.
So this is a great segue into, one of your pieces of the legacy here, which is the Cultural Leadership Fund, which was something that you conceived of and built within Andreessen Horowitz's platform. This obviously is a combination of that access point you just talked about. Not everybody gets the memo, right? When there's an interesting investment opportunity, right? But you also realize that a lot of these dynamics are structural in terms of maybe people just don't have access to certain networks. They never see these deals, which creates, or exacerbates the wealth gap, so to speak. Where were you, in your own journey when you conceived of the Cultural Leadership Fund? What was the genesis of that idea? And how did you formalize that into a platform that, ultimately created this access?
I mean, the long story short is that it was a combination of a bunch of things happening at once, which I didn't even realize was going to happen. But I think just the halo effect of A16Z really helped kind of bring all of it together. One, I learned very early on that you have to have an idea maze, and every founder has an idea maze, which is like, how has your entire life got you up into this position? So all of your previous career experience getting you into this moment where you have this idea that is going to be the thing for you, that you can do that nobody else can do. And for me, I came from the entertainment business, when I was a music producer and engineer. I had a consumer startup that helped restaurants, and helped restaurants have menus with smartphones and tablets and high quality photos of each dish. And then now I'm in venture capital. So I'm like, okay, how do I put entrepreneurship plus entertainment plus venture capital into one thing? And then I had no idea how to even do ventures. I'm like 25 years old as Ben's chief of staff. So still trying to figure it out. But then a bunch of hypes, like quiet hype, started happening within Silicon Valley, where people outside of the industry in entertainment and music and fashion and film were trying to understand, this consumer era that was really happening in the 2010s. So people started coming up into our office, and I remember like Carmelo Anthony came, and everybody was like just kind of in shock and wanted to take a photo with him. And in my mind, I'm like, I love Melo, but we should figure out how we can help get him into these deals, help him on co-investment stuff. Same thing with like a lot of the Warriors players, where by even being out in the Bay, whether it's KD or Andre, just having them kind of have an interest in Silicon Valley and being able to kind of plug those dots together, because it was a mutually valuable. It's what I called shared genius, where you have the genius of the founder, the entrepreneur, and you have the genius of the, you know, cultural leader. And what happens when you bring them both together and allow them to kind of help ideate on a business idea, get early stage access to where investment opportunities are happening. And I was the only brother in the room, and so when we're making these investments, I'm like, hey, well, we should make sure we can get so and so in, so and so in. Not only were we able to get them into those deals, but it started becoming its own little network. And my original mentor at the firm, his name was Michael Ovitz, and he was the founder of CAA. And so that's who I modeled my early stage career off of, just because I didn't have any venture capital bullet points to point to. So I saw his career and it kind of resembled that. And you think about networks and how networks work, and how a16z is literally built around an entire network. But one ecosystem that I thought was going to be the next big one that no one in Silicon Valley really focused on was people outside of Silicon Valley. So the athletes, the entertainers, the musicians, and senior level executives that can really help power up and take these businesses to the next level. Because if you think that every single business that might start in Silicon Valley, but in order for it to really hit unicorn status, to really scale and really go to the next level, you're going to have the adoption in Atlanta. You're going to have the adoption in LA. You're going to have the adoption around the world. And what better combination and person to work with than someone of cultural stature that can collaborate and identify with alongside the product. And so all those things kind of came together. And I mean, it was the most fun I've ever had in my life, just because when you're in that flow of just doing, it was fun for me. I enjoyed it. It was almost kind of like production to some degree, where, you can just have an idea and say, let's go ahead and do this, 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 and this. And, you can put these pieces together and really kind of see it end up turning into, a Wall Street Journal article or a collaboration, that goes live with the company. And that was the whole emphasis. And, like the last piece is that, just from a wealth transfer standpoint, the next generation of wealth is, at the time I knew it, but I loved looking at Jeezy when in Atlanta, when he was pulling up in the Rolls Royce, down 85, and I'm like, all right, I want to be like that. Or JD, same thing. And then I come to Silicon Valley and I see somebody go from a Prius to a PJ. I said, hold on a second, like, this is a different world of, I don't know what's going on here. And so I realized very early that the next generation of wealth was going to happen within the technology industry, and more people that look like us needed to have a seat at that table, both from an investment standpoint and from an opportunity to even have internships and full-time jobs within these next generation of companies that are scaling up into being the publicly traded companies you're seeing today. So just kind of creating that bridge that connected the gap between the two. And so I think we formally launched the fund in 2018. We've done 4 funds since then. I have an amazing team that's running the show right now. And I think that we really kind of were able to capture lightning in a bottle and really help, formalize and make it official that you could have investors outside of traditional Silicon Valley, which sounds normal now, but at the time it wasn't, be extremely valuable and influential to the companies that our everyday people are using.
I love that, because that Michael Ovitz bio is one of my favorite books. And
Oh, it's great.
and I understand that Andreessen as a firm was really largely inspired by how those, agencies basically operated in Hollywood. And the simple fact that you were in the building, I remember being in Silicon Valley. I think I knew 3 people when I landed, and it's funny you bring it up, because I
I
think
knew nobody.
yeah, I was like, I knew, but it was through Andreessen's events, cultural events, right? Where they
Yeah, for
brought
sure.
folks together, bringing Nas in, et cetera. These are things that you just did not see at venture firms. And that became something that felt more accessible, at least to be in a room. And I'm sure you had something to do with that. But this
Yeah.
idea of like private market investing, right? Why was it so important? And even now, because you've been now, been over a decade on kind of watching private markets evolve. If someone is not invested in the private markets, they're largely invested in the stock market, et cetera. Tell me a little bit more around why you think it's important to be in the private markets, and what type of outcomes have you been able to bring to some of the folks who participate in the first, second, third cultural leadership fund?
Well, look, I mean, private markets, they're high risk, high reward opportunities. But to me, I kind of viewed it as every company, not every, but the majority of companies, especially if you look on your phone right now, or if you think about which companies have really scaled up that become everyday users. I mean, if we continue talking about the 2010 era, like from Coinbase to Instagram to Snap to Twitter to Facebook, like Airbnb, Dropbox, and go on and on and on. Like we were consumers of those products. Pinterest, we loved the products, but the issue for me was that they would come to you, the investment opportunities would come to you at the Series D, Series E round, and especially within Black culture, how we already helped kind of evangelize and deliver billions of dollars of valuation just from consumer adoption, but weren't actually on the cap table at the early stages. And so, when those times really kind of came together, the potato has already been passed. Like people already got their check, they already cashed out, and then now they're giving it to you. And now you're looking at this like this is a great investment opportunity, but like when DJ Khaled was lost on the boat, lost on a jet ski and filmed the whole thing through Snap and drove, I don't even cultural relevance and validation to the next level. Like he should have already been on that cap table before that. And there was a series C, there was a seed round, there's an A round, and then by the time that happened, it's a multi-billion-dollar business, and we needed to really shift. And I think that it's not only just, I think it's everyone needs to shift the mentality from an endorsement based mindset to an equity based mindset. And, even if you think about what's happening in today's world, some of the most valuable companies in the entire world are still publicly traded. All this wealth transfer is happening through the private markets. And eventually, when it goes public, you have access to it. And there's some great companies that are in the public market that are acting like they're private in terms of scale and valuation, especially given this AI world. This is non-financial. Actually, I won't even say it because my team will end up cutting it. But it's just a very, very valuable time. And the same thing with investing is that by getting in early and understanding what you're investing into and being very strategic about it. I'm not saying it's the get rich quick scheme, but it is a extremely valuable asset class that traditionally our culture was not necessarily at the forefront of. Now there are a lot of us that were able to get into these deals at early stages, and that's why I always credit Reginald Lewis, because he knocked down a ton of doors for us. And I give credit to Ken Coleman for how he revolutionized a lot of the industry, for us to have a place in Silicon Valley. And I think that all these things are extremely credible just from a cultural standpoint. But I think from a broader perspective, it's just important to make sure that if you have access and exposure to cover those dots. And I mean, you're even seeing public stocks being traded now that are providing access to private based investments. And so there's a number of those products that are in the market where you can publicly invest into a company, and that's holding pre-IPO businesses just because of the value and where it's going. And so there's a lot of ways to look at it, but I just think I just believe in access. And if you can get in early into the right things, they could be potentially life-changing opportunities. And I think that we all need to I don't have the stats on the wealth gap, but I don't even like the fact that we have to be included in that stat. And I think that the age of innovation and technology can level the playing field, and I want to make sure that at least we have awareness on it.
Now, the harsh reality, though, so I think everybody would agree with what you're saying. The harsh reality is that, I think Andreessen has recently raised a gazillion-dollar fund, I believe,
2
you know,
gazillion.
like Austin Powers. And
Mhm.
so a lot of times, the check that someone can write who's called a high earning professional, maybe they can write 25, 50K, right? Not meaningful. In fact, more pain in trying to digest that small number, from an administrative perspective, from a compliance perspective. I remember calling you up and saying, yo, I heard about this cultural leadership thing. You're like, yeah, but you got to be a qualified investor, and
You
maybe
have
you
to
can
be a
kind of
qualified purchaser. We call it
purchase, excuse
a
me.
QP.
Exactly. And so there's a reason for this. And ultimately what that leads to is like another layer of the game, right? Where if you're trying to interact with funds or a lot of the folks that have like that clear access, you got to be at another level, right? And so there's the access of like, do I even understand or know about the deals that are potentially interesting? And then there's am I at a level net worth wise or check writing size that I can get in? And this is another kind of set of barriers. You mentioned some of the things that are opening up. You mentioned that there's some public vehicles that give you access to private market opportunities that, probably surfaced like over the last, I'll call it a year and a half. You hear about SpaceX and Anthropic. But what are some of the other things? Like, what do you see in terms of the evolution of access, in terms of where we are now and what you see happening to let more people into the doors in the future?
Well, I mean, I think that, there's going to be more funds. There's going to be more. I like one of the other reasons why I think, again, direct investments is great, but some funds you can be a qualified client versus a qualified
And can you
purchaser.
break it down? Just give us at a high level so people who may not be familiar with these terms.
Well, look, a qualified purchaser is probably you have to have basically a set of equities and a set, like, whether it's a net worth, whether it's some you have to have so much money in assets in order to actually be able to get into certain type of funds. And that's that's kind of the main reason. You, like, for example, a qualified client is you have to have like $1 million in AUM, with the advisor, or $2 million net worth. And like for like a qualified purchaser, I think that's like around $5 million in investments, and it doesn't have to be a net worth. And and then they're also governed by different rules. So I think that, like, it's a higher bar, qualified purchasers that are used for more institutional grade private funds, and a qualified client is kind of a lower bar used for separately managed accounts and smaller funds. So when you start getting into, the A16Zs of the world, a lot of those times you'll have to be a qualified purchaser. But with more and more funds that are starting to evolve, as you're seeing more and more fund managers that are raising sub $100 million funds, but still getting great access to early, alpha and beta opportunities, you can rather than you trying to go and direct invest individually, knowing that's not even your full-time job, which I don't really recommend. You can use kind of almost like a private version Vanguard structure of getting an ETF that allows you to kind of carry a basket, and maybe you can invest into, again, going back to building your network, finding, a emerging manager, or one that has actual, we call it DPI, which is basically they've given money back to the LPs and have a proven track record, that now you can get exposure into some high quality private markets, private investments, without having to do all the heavy lifting. In same way as you have your bank or financial advisor who you're paying them to move your money from your check-ins to your savings, you could do the same thing even more with that was a Kevin Hart line. So to 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 really kind of help pay management fees, and in return, you now are getting some exposure on the private side.
Got it. So, and again, this is not investment advice for the people listening. This is just kind of Chris laying out what he's seeing from an options and an access perspective. And basically what I'm hearing is, one, diversify, right? So, this is not about putting all your eggs in one basket and hoping for that one thing. As you mentioned, it's high risk, you know, high reward potentially. The
Mhm.
second thing is, it sounds like if you're not doing this professionally, you would highly recommend folks look at, funds that basically do this professionally. And some of the bigger funds may not necessarily be accessible. You talked about some of the levels of this, right? I think the folks that you're probably talking to are automatically QPs, athletes. Basically, your buckets are entrepreneurs who are successful, corporate America folks who are later maybe in their career, and maybe folks that come from wealth. That's kind of like who's really cut out and available to invest in these bigger funds.
Mm-hmm.
Maybe the work that can be done to identify a fund that has an interesting thesis, and you focus on that fund, and that fund does their homework to get you into a portfolio, diverse portfolio of companies. That might be an attractive approach for someone who is working, right? They're a busy
And then
professional.
you might have someone that might do your fund that you're investing into, might get a sleeve or might get some alpha that, hey, I got an additional 50K available in this deal, maybe, and I'm distributing it to my LPs on a first basis. Maybe that's something you might be interested in. And then now you can kind of go to the 2.0 version of that and saying, okay, well, maybe I should write a check in here, or maybe this might make sense, or this fits my thesis as I see the world and I really believe in this company, or I've heard about it before from so-and-so. And so, I think that that's kind of the tiered strategy.
Okay, so you mentioned thematics, and I want to kind of focus on that because I would argue the same way that you were kind of, early, I would argue in entrepreneurship, early into the Atlanta music scene, early into tech, even your startup was really tech enabled. At the end of the day, you can make the argument before you came to the Valley, you were already building a tech company. We are now in obviously the AI, right, driven era. And it seems like this is probably the biggest revolution all of us have seen. And, we've lived through the internet, we lived through mobile, we lived through crypto as well. And you were a big early mover in the crypto space. I would love to hear where first kind of popped your head up and said, for blockchain technology, I think this is the future. You see a lot of different opportunities. You really locked into that one. And I would argue, one of the bigger proponents, at least I could think of in the earliest stages of that. And then now we're in AI. So tell us about how you locked on from a thesis perspective. What was it about, that blockchain technology that fit into your personal philosophy of access? And then what are you looking at now?
Yeah, well, I originally got introduced to it when we ended up winning the Coinbase deal, and that's when I learned about Bitcoin. And I'm like, well, what is this thing? And so, understanding what the term digital gold meant and how there's scarcity and 21 million Bitcoin that are going to be available and using decentralized technology and all these things. But then the real thing that really kind of stuck to me, and it kind of goes into the private market QPQC thing, is that, crypto, there's three layers of the internet. There's the read layer, which is kind of like, the browser, which Mark invented. And that's 1.0. 2.0 is kind of all the things we just talked about around the write era. So, being able to write on your Facebook wall or, upload a photo on Instagram or, whatever, like that's the write era. The third layer is ownership. And so that's where blockchain technology really comes into place. And the thing that was the most interesting to me is that, I think that I thought that originally the next generation of wealth was going to happen within just private markets, but again, there was still a barrier that you had to have in order to get into those deals. With Bitcoin, the only in other types of tokens and crypto technology, the barrier is information. And so, anyone could have purchased it at $1, $100, $1,000, $10,000, whatever, if you knew what it was and you knew how to get it, right? But there was no, you need to be a qualified purchaser, you need to be this, you need to be that. You had to have access to the information. And so the thing that we talk about here, and I think the underlying theme is ownership, and you need to figure out the world of how crypto is actually rebuilding the rails of ownership. And I think when that connected to me is when I realized that it's going to be one of the most transformative industries of where the world goes. And I learned this part from Ben, and he would say it way more eloquently than I will, but there's this world where we call like crypto computers and networks. And within each generation of major technology innovation, you're going to have these combination of of computers and networks. And the last big one that really took off was when you had the smartphone and the iPhone revolution, which was the computer, and then you had the network, which was the internet, and being able to combine those two together really created a transformational, opportunity that allowed that last era of companies to be built. And what we're seeing right now is the next generation version of computers and networks, where the computer that's going to be built in this generation that's rebuilding all of the entire rails of every single company you can think of is AI, and the network that is going to represent and connect the dots between the two is going to be crypto. And so even though it doesn't look very apparent right now, the collaboration between these two products, you're going to see more and more opportunities to really kind of have the intersection between this crypto, these computers and networks kind of come together, which to me makes me extremely excited about both products. And the last thing I'll say is that in regards to AI, I mean, like, it's going to be all over the place in a good way. But the one thing that I'm most excited about is in this last era, I mean, like I said, we've known each other for almost 13, 14 years. When I was in Silicon Valley, you had to know how to code. Who was your technical co-founder? If you didn't have one, it was over. There was a huge barrier to entry in order to get your ideas out and turn them into a company. People spend hundreds of thousands of dollars trying to find devs, offshore dev shops and this and that. And by the time you build a product and then you go try and pitch a company, they figure out your product is built by a dev shop. And once you're done with that product, it's automatically done. And I saw this time and time again of people that had great ideas. The products ended up getting, to a good MVP, but never could make it to the next level because from a network standpoint, people didn't necessarily know who the right engineer was. You didn't go to the top school, you didn't study computer science, all these type of things. But now, with AI, we're really leveling the playing field. And with these tools and these models that are coming out right now, anybody has the opportunity to turn your idea or whatever you believe that you can solve, and with the right tools that are constantly being upgraded and deployed every day, we're going to see a whole new wave of companies being built. And that makes me extremely ambitious, not only for the future of entrepreneurship, but the future of creativity, just
Mm.
the limitless supplies of where things are going to go. And then also from the next generation of jobs that are going to be built. I think that for so long, companies had to, and I also, Ben talked about this a lot. It's like, if you wanted to work at Microsoft or Google back in the day, like, you had to go through this constant, junior manager, mid-level manager, senior manager. I don't even know the stack, but it's a long way up, right? You're having now kind of restructure every single tool, every single company because we're rebuilding the railroad online right now with these products and with both of these tools combined, which basically levels the playing field because if you know how to use these things, you are literally 15 people in one, and companies are looking for that. And so because AI is something that came out, it took 60 years to get here, but it's here now, and it's only going faster and faster because of Moore's law. And I think that this is the number one skill, that I think that everyone should be paying heavy attention to and to really figuring out how to implement it into your systems. I'm seeing more and more companies and more CEOs encouraging people to integrate these products and use them to their advantage because they understand the ROI that's going to come from this. And I feel like we are in the digital renaissance at the perfect time, and it's ours for the taking. So,
No, I love that because, you started off by saying you're about ownership, right? At the end of the day. And that was one of the things that really got you excited about blockchain. And I think
heck
you dropped a lot of game in there. I'm going to try to unpack real quick for the audience here. So one thing is the blockchain piece, you're basically saying is just getting started. It's the intersection of AI and blockchain, which is going to eliminate a lot of the barriers that exist currently for people to participate in some of the more interesting opportunities with upside. And so that's something that as an overall theme, is something we should get excited about because, Gravy Wealth is all about ownership and shifting people from that earner mentality to that owner mentality. I think the second thing you mentioned I thought was really interesting is this idea of the builder mindset that we should have. And I remember these days being in Silicon Valley where it almost felt like it was impossible, to get VC, right? And if you couldn't get VC, you still had to get this developer to build for you. And it was like this chicken
Yeah.
and the egg trap, which you kind of
Yeah.
outlined. And a lot of people might come out of their pocket, 50K to build something,
Yeah.
and you never really got the engineer, which was ultimately what you needed to be sustained, right? That is completely gone. And it's increasingly so because it went from, oh, maybe you can do a couple things here and there, but things are moving so fast now that, I wouldn't be surprised you could almost build the full stack as a
Mhm.
non-engineer in the next couple years, depending on how things are going. So a lot of barriers basically are kind of already dropped for builders. And you're saying from a overall investor perspective to own is now going to expand your opportunity as blockchain is able to meet with AI. I think these are really interesting principles for people who want to shift into ownership.
You that was like a Google summary. That was good.
I'm not fully,
That was
fully
good.
reliant yet.
Look, I don't even need to say nothing. You got that on point.
No, look, on the last note, and I know you got to get back to to business. This ownership thing, can you, a lot of folks who are watching right now, many of them are they are the successful people in their circles, right? They got the good job. They've been able to take care of themselves, get good, a good degree. But a lot of that feels insecure now. And there's some fear, right? You kind of laid out an optimistic case, but for folks that are in corporate, you're seeing Microsoft laying off 9%, you're seeing Meta, et cetera. These are the high earning jobs. Wall Street, the ones that people who went to business school are looking to lock down those jobs, and lawyers, et cetera. They're all kind of taking a hit. Why do you think it's so important right now to focus on ownership, not just for today, but for where things are going in the future from your perspective?
Well, I'll end like this. I think ownership there's two different components. One, I think ownership is involved just from a financial concept to even like an identity concept. So like, and you need to own your taste. You need to own your network. You need to own your point of view. You need to own your time. Financial ownership is just a downstream of all of those things, and the cap table follows your conviction and how you see the world, and not the other way around. So I think that on one level of ownership, if you don't have a stance on in terms of how you view the world, I think that other people are going to create that around you, which then will leave you behind the scenes. And so I think that you want to really take ownership in terms of where that goes. The second piece, which I feel like is, with everything, and is just the power of compounding interest. And how important it is to just start now on all of these things. I mean, from saving to investing to taking, accountability into your tool chest and what's going on right now, to getting reps in and knowing these AI models, to, putting, a piece into different type of exposures and that you feel like where the next generation's going. I think that if you don't do it now, there's always a time to do it, but you just missed out on, the greatest thing in the world, which is compound interest. And I think that you have to kind of be, you have to be okay with taking a little bit of risk. And that's the last thing I'd say is like you have to and bet on yourself. And I think that the biggest trait that is for successful founders, successful executives, successful anyone that's in Silicon Valley you don't have to be in Silicon Valley, but have the mindset is courage. And so you have to have that courage to actually go out and do the thing and go out and speak up in an industry or vertical or try something new, or the courage to go out and build a company, or the courage to make that investment with the information that you have. And I think that if you can do all of those things, then you realize that ownership is is a personal thing, and all of these external pieces are just reconfirmations of you actually going out and trusting in yourself. And so that's the greatest level of ownership to me.
I love that. Anything that you got going on right now that we can support?
Yeah, support my wine brand. You need a good celebration, definitely. Like that's one thing I always like to have little side hustles and things that I'm just very interested in. And so, and also it's a good way for me to kind of map my tools around. And so I have a Lambrusco sparkling red wine. So in case anybody ever needs to celebrate, you can go celebrate. You can go support that. What else could we support? I think we have a number of nonprofits that are also really helping advance the next generation of people outside of the Silicon Valley industry to learn how to code and learn how to do other things like that. And so I would put that in on the top of the list. And I think that we're constantly figuring out new ways in order to innovate. And so I think that the last thing into sport is like through mind sharing and putting things together. So if you find interesting opportunities in which any of us can collaborate on, I read all my emails. I'm always up to speed on everything, and just feel free to reach out, and I'm always happy to help. But that's all I can say right now. I want to make sure that we can support each other, and we
For
keep
sure, man.
some going, and we keep on, keeping holding each other accountable. Because I feel like if we can do that, then all things are possible. Because if we don't do it, somebody else will. So let's all round each other up and keep going.
Virtual round of applause for my man, Chris Lyons. Always been real since day one.
I appreciate
Seen it all,
man.
done it all. And
No,
still just
congratulations
beginning.
to you too, bro. I mean, this has been very exciting to see the evolution and the journey. Like we said, this is long overdue, but
Yeah.
I'm very excited for everything that you got going on, and I know that this has been a valuable experience for everybody here. And I think that we can all do our parts to help really advance our ecosystem, and this is a valuable platform to do so.
Appreciate you, man. All right. That being said, we'll do a part 2 with Chris some point, maybe next year. Hear some stories about some of
Let's
these.
go.
Now, Chris, appreciate you, my man.
All right, I'll see y'all.
All right.
Appreciate you, man.